debt service fund, capital projects fund, permanent fund, right? Enterprise fund, internal service fund, those are our funds, right? Function or programs, we talked about that. Police, fire, general government, right? Organizational unit, units that fulfill that function. So you could have public safety being run through two different departments. That would be your organizational activity. Actually, let's see if there's more here so I can, here we go. Yeah, it explains it right here. Funds, I just spoke to you, function or program, organizational unit. And basically what it is a upside down tree. Basically you are starting with the highest, the level of hierarchy, and then what is it? It's going down below, just like a root. You know, a tree with its roots coming down, because what you have is the fund is the highest, and then we come to the function or program, the organizational unit, and then we have the activity, which could be, you know, garbage removal and things like that. Character, which could be the type of expense, debt service as opposed to capital and object. I'm not going to go through this too much because you can read about this and it's really not that difficult to comprehend. I want to address more of the important areas. Okay, so there's one journal entry I want you to know, and that's this. For the time being, see the bottom part of this? Pretend it doesn't exist for the bottom, just those first 3 lines. I want you to read this and tell me just for a moment and think about this. This is the journal entry which is made by every single government every year when the budget is passed. Estimated revenues is debited, appropriation, which is estimated expenditures, is credited, and budgetary fund balance. And what confuses students is they say revenues. Geez, I thought revenues always had a credit balance. Estimated. Budgetary accounts always have the opposite balance of the real accounts. So expenditures have what? Expenses like have what? A balance of what? A debit. So what would estimated expenditures or appropriations have a balance of? Credit. Revenues have a balance of what? Credit balance, but estimated revenues are what? Debit. And you might wonder, why is this the case? And let me see if there's an illustration to show you. Actually, maybe in the next chapter. But basically what happens is, in your mind, I want you to think of a T account, or just an account, a revenue account. If I needed to raise $1 million, my first entry would be what? Debit, revenues, 1 million, right? Or as in this case, 500,000, right? I receive $10,000. What would my entry be? Debit, cash, credit, revenue. Now what's happened? That balance was what? 500,000, right? If I credit that $10,000 number, what's my balance now? It would be 490. What does that 490 mean to you? What does it mean to you? This is the amount that I still need to collect. That's the purpose behind this. So when you look at the ledger, you'll always know how much more money do you need to collect. Let's take the example again. You debit estimated revenues, so you now have a debit balance of 500,000. You receive $10,000, real money. Debit, cash, credit, revenue. So debit balance of 500 and credit of 10,000, what does it give me? Debit of 490, and that's the amount that I still need to collect. That's how budgetary accounting systems work. And the same thing happens with appropriations. Appropriation, when you has a credit balance of 450, when you buy something for $10,000, it gets debited, and what do you have left to spend? 440, right? If you get that, you're in good shape. If you don't, you need to look at the example in the book. Actually, here's the example. Yeah?
I have a question.
Yeah.
You said that the budget that was approved, you mean the final budget, right?
It could be the initial budget, and it could be the initial and final, we could add to that. This is the example, by the way. Here I've talked about it, but it's right here. Look at how it's shown. They received two flows of revenue, 4,000 and 5,000. Now what do we have? 41,000. This is a budgetary account. Rocket science? No. But it's purpose-driven, because that's what the purpose here is, to show us where we stand. Okay, now the second journal entry. Oh, by the way, let me just go back to the first journal entry. The CFO here, do you have a problem with him or her making this journal entry? Do you think he or she is being prudent? Well, it looks like they're being very conservative by not spending all the money, right? But usually the answer is never that. You have to go behind the facts, as we'll look at shortly. What if I were to reverse this? Estimated revenues were 450 and appropriations were 500, and now the budgetary fund balance goes the other way. Would you be concerned? Yeah, you'd be. You'd want to know, where's that, what's going on here, right? But if I came back and said to you, you know what, we have like $1 million sitting in this fund balance account, we thought we'd use it. If you're the property owner, you'd say, yes, please use that money instead of taking taxes from me, right? So what we have is this conflicting interests of stakeholders in governments. Now let's go to the journal entry. This is the second journal entry that I want you to always never forget, okay? It's the same journal entry every single time. When you order an item, you debit a budgetary account called encumbrance, and you credit a budgetary account called encumbrance outstanding. Now, this entry is so simple. When you receive the item, so what was the cost of the item? 500, right? And the item came back and you received the item, you reverse the entry. You debit encumbrance outstanding and credit encumbrances. So you say, why do we do this? Again, as I said, we do this because what we want to do is, as soon as we use the word encumbrance, we are reserving a certain amount in the account as commitment so that it cannot be overspent. We'll take a look at that. Look at this for a moment. The second and the first and the third line. First and the third line. Everybody see that? Right? What did we do? We reversed it, right? How much they actually end up spending? You know, it would be nice if whatever we put in our purchase order was the final bill. Usually you get the final bill, they add transportation. I was going to say taxes, but no, because governments don't pay taxes, right? So, yeah, actually, if you work for government and you get a bill from a vendor and it has taxes, you are allowed legally to pull that item out of the bill. Okay. So here, they actually ended up spending what? 515. But notice, we didn't make this 515 because this is the original amount. We need to keep it at that. Okay. Now I want you to just for a moment look at this journal entry, this ledger, and see if you understand this. Just take a moment. Okay, so for this account, they had $1,500 that they could spend. Notice what happens as soon as they issue a purchase order and when they made the encumbrance entry. It goes down to what? $1,000, right? Notice the next entry. That encumbrance is reversed, expenditure is shown, and what do we have left? $985. Does it make sense? See that? See what's done here? This is reversed. 515 is now taken out to give you, because 515 minus 500 minus this number gives you 985. This is an example of a ledger. So these are the two journal entries that I want you to really, from this chapter, that I'd like you to keep in mind. Allotments, read on your own. This is really, this comes for the following reason. If you have the entire year's budget, right? What if you blew the entire year's budget in the first 3 months? You still have money left each year until March you're done. So what allotments do is, if you had $1,000 for the budget, they say, you know what, the maximum you can spend is $250 every quarter. So that's what the allotment concept is. Computerized accounting systems. What I'll tell you this, and this is from my previous experience when I actually did this for a living, was from the practitioner side. Would you believe that there's no real good piece of computer software which actually does both accrual and modified accrual basis. We all have to take different things to get it done. So for instance, the software that I use was Oracle e-Business Suite, which does allow modified accrual basis to be used because it has budgetary accounting. But I could not produce government-wide statements from it. So this chapter talks about this, and when we go to chapter 9, it also talks about it. And this is what this slide really talks about. We won't talk about the accounting for public school districts. And actually, that's chapter 3. So what did we... So what did we study in this chapter? We looked at statement of activity, distinction between direct and indirect, right? We looked at extraordinary items. We looked at special items. We looked at what comprised general revenues. We looked at program revenues,